Thank you to both our panelists for being here. Now, we are here to talk about ESG, but I think you cannot avoid talking about tariffs as well, that for some, including agri-traders, might be compounding the climate risk. And then you think about as well the uncertainty surrounding US policy, including on sustainability initiatives, the net zero transition. But we have some in Asia, including Sintesa Group, that are staying the course and remaining very committed. So let's first get the lay of the land. Sunny, let's start with you first. We just heard from the Canadian minister talking intensively about trade. How are tariffs, first off, affecting the business and impacting, perhaps compounding as well, some of the climate risks?
So tariffs in agriculture, and I'll speak in the context of agriculture, we know the wide-ranging impact of tariffs across all sectors and the economy overall. But agriculture is particularly sensitive because we already have fundamental challenges in supply and demand, and I'll go through that in a minute. But the standoff currently between China and the US on, let's take a case in point, soybeans is a good example. China is the world's largest consumer of soybeans because it's the fastest growing protein market, and therefore it buys about 110 million tons of soybean annually. A significant chunk of that was from the US. US accounted for 60% of China's soybean imports. But today, for the first 10 months of this year, China has not imported a single kilo from the US. And most of China's supply has been substituted, US supply to China has been substituted by Brazil. Brazil is now the fastest growing trade corridor. The soybean exports from Brazil to China is now the fastest growing trade corridor. And between Brazil and Argentina, which is also extremely close to the US, are meeting all of China's requirements. And that is why China has held on. We will see what happens in the next day or so in terms of what the final settlement would be. But that's an example. US is the world's largest exporter of cotton. China is also the world's largest importer of cotton. So that's another example where it's stuck. There is no exports at all. US, for example, in our business, is the world's largest producer of almonds. It's a very expensive place to grow anything. But because of certain agroclimatic conditions, 84% of the world's production of almonds comes in California because you have to cross-pollinate that. The bees like the agroclimatic conditions in California. The bees will only fly for a few hours in the day.
Right.
I can't give them overtime and get them to fly more. If the wind speeds are a certain 15 kilometers, more than 15 kilometers an hour, they will not fly.
Right.
So that's why California is a very big producer. China is a huge consumer of almonds. Where is that almonds going to be replaced from if there is a stalemate? So these are just very few top-of-the-mind examples of businesses that I'm involved in where I see the impact of tariffs.
That's very important context, right? Talk to us also, in the past day, we're hearing very positive setup in terms of the tone from the US Treasury Secretary, Scott Bessent. There are indications, or at least they're optimistic, that the Chinese will up their purchases of soybean. Maybe not this year because it's too late in the year, maybe next year.
Yeah.
How are you viewing that? Do you think that is realistic to expect? And to what extent might we actually see an increases from the Chinese side on soybean purchases?
So China has learned its lesson, and it will never be dependent on any one country, particularly for food. So we have fought wars over oil. Imagine what we will fight over food and water, which are the other major strategic challenges in food security. So we have firstly a food demand problem. We need to add another 7,500 trillion calories per day to meet the growing population. So there's a demand gap. We have a supply gap. We have 593 million hectares that we have to additionally put under cultivation to feed all the world, right? 593 million hectares, to get a sense of what it means, is twice that of India. So you need to add 2 Indias to bring it under arable cultivation to meet the demand from the supply side. The third is the GHG mitigation gap. If you want to get to 1.5 degrees centigrade, you need to reduce agriculture's greenhouse gas emissions to 0. And today we have got about 12 gigatons of contribution from agriculture emissions. It's going to go to 15 by 2050. That has to come down to zero. In order for it to come down to zero, to get to 1.5 degrees, we have to plant another 87 million hectares to really achieve that. Then we have a nature biodiversity collapse. The bees are a good example. I had to make a profit warning because in Australia we had a varroa mite infestation. It destroyed the bee population. Instead of having 5 beehives per acre stocking density, I could only afford 2 because there were no bees. My yields collapsed. I made a profit warning that we will lose $138 million. So these tiny fragile creatures, I buy 4.8 billion bees a year.
Right.
Spend about $13-14 million. So we know every tiny toad, tick, and creature, as far as biosphere integrity is concerned, is vital for agricultural production.
And how does that relate to China specifically when it comes to what it might be buying more or less of from the US, you think?
So China's looking at where climate change impacts are the most, where biodiversity impacts are the most,
Right.
where the water challenges. 70% of the world's fresh water is in agriculture. There's no way we can increase land or increase water. So how do we meet the growing demand for calories with the growing population, change in dietary habits, when you have constraints in terms of resources? So for every unit of animal, every unit of land, every unit of fertilizer, every unit of drop of water, rainfall, you have to maximize productivity. So that is what all countries, in their self-enlightened interest, is looking for. How do we manage these supply chains and configure the supply chains that we are not dependent? Because it's not just the US tariffs. Indonesia bans the export of palm oil. India bans the export of rice. And I can go on. 117 new non-tariff trade barriers and tariff barriers has been imposed by many countries around the world.
Sunny,
we talk about the US.
We know you are obviously, Olam, massive player in cocoa, coffee trade. So I want to get your thoughts on that in just a bit. But Ibu Shinta, if we could just bring you in here, because I just talked about during our introduction and off stage as well, when it comes to ESG, it doesn't come naturally. Now we're seeing shifts in policies globally. How do you stay the course?
Well, first of all, when we look at Indonesia as a country, obviously many companies, local companies, this is still a concept that we are still learning the cost, let's put it that way. We know the demand of market, the trend of the market is there, that all companies now are following the standards. But bear in mind, our local companies are not in a way connected and linked up directly on a global market. So what Sintesa is doing is basically something that we try to be ahead of most of majority of the local companies. When I started the effort of sustainable development, even in Indonesia, I think there was 2012. At that time, our president becomes one of the eminent person for SDG. You know, I never thought the journey will get me this far. You know, in which putting Indonesia in the map. And as a Sintesa Group, actually, we are a family business of over 105 years. I'm a third generation. The last thing that I think my grandfather started a rubber plantation. My father started a trading business. In their mind, there's only profit, right? They don't look at a triple bottom line, you know, sustainability. What is this all, right? So I think the first foremost important is for me to really bring Sintesa into a space of this is going to be now our vision. We want to be a sustainable excellence company. We want to balance this profit, people, planet, and make this not as a jargon, but something to be implemented. And of course, now we have all the measurement that's needed. But again, we need a compass. So the first thing that I always believe is that when I'm convinced with something, I want to lead effort, and not just for my company, but also for Indonesia's private sector, I have to start with the people, right? So I think putting embedded ESG at that time we're looking into SDG, into our business model, I think it's not an easy journey.
To your point, though, about being perhaps ahead of your time or our time when it comes to ESG, starting way back when, how difficult was it to convince shareholders, in this case, your family?
Very tough. They think I'm like, continuing. Sometimes I always said, maybe starting your own, like founding something. It's much easier because it's yours. When you continue family business, there's this legacy that needs to be continued. And for sure, you don't want to be the third generation who's going to break this family business, right? So in their mind, of course, the number one is the economic aspect, the profitability aspect. So convincing, I think, our shareholders that this is the way to go is not an easy game. And at the same time, I have to ensure that this is not going to impact our economic bottom line, right? In other words, we will continue growing despite all the initiative that we are trying to do on the SDG
So
side.
with that in mind, what are the projects that Sintesa are still focused on, whether you're looking in terms of the expansion when it comes to the energy transition or projects that are related to infrastructure, specifically urban industrial usage?
Yes. So first, when we look at now the model of the SDG, we have embedded this on the investment side and the operational side. On the investment side, like I said, we are a 4-pillar company with fast-moving consumer product, industrial product. We have a clean energy, and we have the property side, right? So we are now specifying specific SDG goal into our investment and operation. On the investment side, we have what we call the investment matrix that we follow. And for example, for specific on the real estate side, when we are doing the development, building, infrastructure, we have specific metrics on how to follow, going into the SDG that we want. So this is not just about wanting to do it. It's how do we actually measure it in order for us to get to the KPI of the ESG that we want.
Sunny, let's bring you in here because we know how that long-term plan in terms of restructuring, I guess, for Olam, part of it was to make the business more sustainable. How would you assess the progress you've had so far? What else are the gaps that need to be closed? And in what way is it helping to attract additional investors for Olam?
So some part of sustainability strategy for companies is very idiosyncratic and contextual to which sector and what kind of business model you have. Some parts of sustainability is generic, right? So on governance side, I don't think it is sector specific or idiosyncratic to any particular company. So for us, the only way sustainability can take hold and have deep roots in the company is if it is an integral part of your business model. And that you are actually able to demonstrate to your stakeholders that through these sustainability programs that you're running, you're actually able to do multiple things. One, increase your share of wallet with your customer. So second, improve your margins, reduce your costs. And we can give many examples of that. But if you are not able to demonstrate actually what is the impact, you will not get support, and it's not going to be sustainable to keep it going. So for example, there is a new EU law called EUDR, and about 9 supply chains are involved. So we are getting significant premiums. So typically a gross margin, say for FSC certified wood, will be about $70–80 per cubic meter. But a EUDR certified, FSC certified wood product will give you an incremental 125, even given as an incremental $200 per ton. So it is almost 3 times your current inherent margins.
Right.
So there are so many programs that we run where we can demonstrate that this has given us an increasing pricing power, given us a higher share of the customer's wallet. It has reduced our costs, energy efficiencies, and everything else. Actually, you can demonstrate has reduced the cost. So if sustainability is an afterthought, if it's a risk mitigation strategy, it is not integral to your business model, there's no hope in hell that it's sustainable.
Okay, it has to be integrated within.
Integrated, and you have to demonstrate. because it has to be sustainable. It's only sustainable if it is going to have an impact for
Right.
us.
You raise a good point. I mean, when it comes to premium, I wonder also, are you seeing this so-called greenium? And
Yeah.
sometimes that's linked with ESG labeled debt. Are you seeing that fading? Is there an erosion of that? Is that what you are witnessing?
No, initially when these initiatives are launched, it is very difficult to transition and be ready. So during that period, there is excess returns because a few companies are able to make that investment or use technology to help them comply. So Singapore is one of the few countries where there is a carbon tax. It was $5 in 2017. It has now gone up to $25. It is going to go to $45 next year, and it is going to go up to $80 by 2030. You have scope 1, 2, and 3 emissions. 70% of Singapore companies' emissions are taken care of by the Singapore carbon tax. If carbon is free, we are going to pollute indiscriminately. If water is free in Singapore, or electricity is free, we are going to consume indiscriminately. Now carbon is priced. So for me as a company, my emissions in Singapore is low. But for one of my 3 companies, we have total emissions of 59 million tons a year, out of which 56 million tons is scope 1 and is scope 3, and only 4 million tons is scope 1 and 2. But if I take my total emissions and I get a carbon tax, let's say on an average $50, then I have $250 million of carbon costs in the future. What is a bigger priority for me as a CEO or for my CFO, but to address this single largest item of cost, which is going to be a reality. 55 countries have now implemented some form of carbon tax. And that is therefore going to be real dollars that you're going to incur.
In terms of financing, does Olam or yourself, do you have a preference for, say, loans versus debt or bonds? Given how maybe bonds might have a bit more scrutiny now, does it make things a bit trickier when it comes to ESG?
The key is really how many bankable projects which you can demonstrate benefit, cost benefit, and that can be sustained over the tenure of the project. So we are agnostic to whether it should be a loan or whether it should be a trade finance facility. In 2024, we raised about $3.6 billion of sustainability-linked financing. That is at real scale. That is across the globe.
And more to come?
67 countries.
And more to come in terms of the scale of raising. Is that what you're anticipating as
Yes,
well?
and we expect we will get some advantage. But even on our scale, if we can get 10, 15 basis points advantage for sustainability-linked financing and loans, it can make a real impact to our bottom line.
Okay. Ibu Shinta, I see you nodding away. What is the perspective from Sintesa in terms of bankable projects and what you are looking very interested in?
I think, when we look at the financing, I'm now co-chairing the UN investing in SDG, and we have all kind of financing instruments. Blended finance especially is something that we're currently doing. But so I think the financing, it's definitely out there. It's more of having the bankable projects. And I think this is, when we are in renewable energy, for sure, the financing is there, right? But again, it's more the cost of the financing. It's not the excess of financing. So the cost at the end of the day, you have to calculate that, right? Is there, cost also means incentive. Like, is it a lower interest rate when you do a renewable energy project compared to, others? I think this is something that we need to pay attention, because at the end of the day, the number needs to work. But besides that, the incentive, this is why we always work out. Indonesia is right now, for example, going through energy transition. We have projects that are going into the middle. On the energy transition, besides the financing, the regulatory framework is very important, right? We are a fossil fuel country in which we are now trying to drive the energy transition. Actually, we're working with Bloomberg, having just issued the fact book on green transition. So you look at all the opportunities, but why are the execution not as what we wanted, right? So the government needs to pay attention that the regulatory framework and the policies come out. We're talking about the tariff. We're talking about the incentive that is given needs to be there. And on top of that, I really believe this is to make projects bankable by itself. You need to really have the right environment. It's not just about the company getting ready for the project. The whole environment needs to be there in order for the financing to be in place. So we find that many of the projects that we do on the renewable, for example, I mean, I wanted to share this specific project because I'm so excited about doing our seaweed project. It's called the Seaweed Indonesia Incorporated. What do we do? It's the ecosystem that we build. You know, any company wants to set up, want to develop seaweed. I mean, we have many opportunities, but do we have the right ecosystem to make it work? So what we do is now we work together with our government, right, in developing seaweed potential research in different areas of Indonesia. We have certain pilot project, for example, in North Sulawesi that we are developing. We have an ecotourism project. On top of that, we are also wanting to develop seaweed there. And we need to work on really the government and types of the technology that we bring in on the research side, but also working on the financing side also with the buyers. Because at the end of the day, we also need to do from the development of the seaweed, where does Indonesia is going on downstreaming industry. Do we want to go in which downstreaming pillar that we go on?
I was just wondering, what role do you see then Sintesa play in this ecosystem? Are you perhaps considering coming in as concessional investor versus commercial investor? Are you considering concessional equity? What is the...
We are an ecosystem builder. You know, at the end of the day, I find that companies, there's a lot of even startups out there are doing it, all working on a silo. I said, nobody will make it work. Nobody will be successful unless we build the ecosystem. And this is why we need all the partnership also. We are bringing, you know, from different, not just local, but also technology that we bring from abroad. So what we want to play here is that we need to start from the whole ecosystem. It cannot be just we want to invest in the plantation, or you know we want to, you know, it's in the scenario of the model that needs to work. It's the first thing is we need to identify where does everybody sits in, and the opportunities are plenty. You have the money, you can put in. But one thing, Indonesia, I really believe seaweed, it will be our next CPO.
Okay, watch this space. Sunny, I wonder if you could weigh in on that when we're talking about soft commodities. I mean, part of the competitive advantage that you get in looking at things from a climate angle is to mitigate the risks. That's something that you alluded to earlier. How exactly is that shaping Olam's business, and where do you see coffee prices going against this backdrop?
Yeah, I have no predictions on the coffee prices or all the other commodities that we trade in. We have a point of view, but we do more than 50 commodities. Each one has a different cyclical and structural medium-term and long-term tenor in terms of what will happen to prices, and that's based on many factors. So I'm not going to spend time here talking about a specific view on coffee prices or cocoa prices. But I think there are 4 drivers which are really incentivizing companies now to take sustainability very seriously. One clear thing is that investors are really asking for it. In the past, we had some road shows for looking at raising capital from investors. And when I did these road shows, even 5 years ago, we did not have anybody really focus on sustainability. And today, I don't think there was any investor who didn't want to know about our sustainability strategy and how it's going to impact us. So investors want it, customers want it, and they're willing to pay for it. And we have got many examples of where we're getting pricing power and premium from our customers. Third, we are not able to attract good quality talent that wants to stay with us unless they find some meaning and purpose in the work that they do. So they come to work and say that we're selling more cocoa or more coffee, doesn't excite them. But if they come and say that we are trying to change the company, change the sector, change the world, and we have a role to play, and what I'm doing every day helps in that process, it provides them meaning and purpose, and you're able to get a different level of inspired employees who really want to come to work. They're not saying, waking up in the morning and saying, another day at work. They're waking up in the morning and saying, I want to go to work because I'm making some impact and difference. So I think all of this and the regulatory part, all of these four things coming together is now pushing more and more companies to become sustainable. But the hard part is how to make it integral to your business model. If it is a risk management afterthought, it's not going to work. So I think that is the key. And for me, the most important thing is how do we really bring change to happen? We have had 3 miraculous agreements that the governments have come together and signed up. Paris Accord was signed up by 194 countries to limit global warming to under 2 degrees, preferably 1.5 degrees. Imagine 2 countries agreeing on anything, 194 countries coming together and agreeing on that. And then we had the UN SDGs in 2015, again 195 countries, 17 granular targets, goals, and 167 targets. These countries are saying this is the future that we want to leave for our children. This is the world that we want to live in, right? And then there was the Convention on Biodiversity, agreeing on certain strategic goals and very specific 20 goals. But we have not achieved anything in all of this, in all of these 3 major miraculous agreements. And the first thing is because there is no individual change. There are 8.3 billion people in the world. If I ask the audience here, how many of you know your carbon footprint, your water footprint, your waste footprint? If we do not know what our footprint is, how can we preach that we will deal with these existential challenges that confronts us?
Right. It starts with knowing the metrics, the data.
Individually, not just the
on
company
an individual level.
Then the company has to know it. Then you have to be part of a sectoral coalition. The food and agri sector comes together and say, how can we build a sustainable food future? Then the governments have to come to the party. They have to have the taxes. They have to make disclosure. So Singapore Stock Exchange is now saying that the Singapore Straits Times index stocks will have to next year compulsorily report, mandatorily report. So they have to come to the party. Innovation has to be funded, and we need at least $4.5 trillion a year in research in just agriculture, not the whole thing, just agriculture. Unless all this comes together, we are not going to change. 10 years ago, God forbid, but if you invite me for another Bloomberg conference and I'm speaking, we will be still beating our chests and lamenting, what the hell did we do? Why didn't we act?
Yeah, that's I think part of, I guess, holding individuals accountable in a way.
Yeah.
But Sunny, we are also in an environment where weather patterns are more extreme.
Yes.
I know you've been heavily involved, and your business has been heavily involved in coming up with perhaps innovative solutions. How has that actually brought cost benefits? Can you put some numbers to what you're seeing in the business?
So I told you about carbon and climate change. The task for us is how do we reduce our carbon costs? And our carbon cost is equivalent to almost 50% of our after-tax earnings. So it's a huge priority for us, as an example. But in order to minimize your carbon emissions, the first thing you have to do is measure it. How do we make sure we have 1,800 supply chains in the company? Every supply chain, if I do a life cycle bottom-up analysis of what my scope 1, 2, and 3 emissions are, it will take me 9 months. For each supply chain, it will cost me about 20,000 pounds sterling. So just imagine how costly, how time-consuming it is going to be. So we have a tool called Telescope, which helps us using AI to measure scope 1, 2, 3 emissions quicker, cheaper, more accurately. Now, more than 50 odd companies are using that system today to measure. If you don't measure, you can't manage. So that is an example of an innovation that helps you actually put your money where your mouth is and actually deliver some tangible change.
Ibu Shinta, we're running out of time, but if you could just very quickly weigh in on whether some of these extreme weather events are making it a bit more difficult as you ascertain what sort of projects you're going to put money towards.
Obviously, the whole climate change condition, it's not helping us, right? But I wanted to close with this. I think we have to commit ourselves to what I believe in. In other words, this is something that we start from the top, going to the bottom. When we look at ESG, it's not just about the index of ESG that we are trying to measure, but it's also in how our people are actually understanding and walking through the projects on the measurement side. So what I'm saying now is when we look at, we have now the roadmap of Sintesa for the Earth. We have specific goals on our SDG. Our KPI is not just about performance or financial performance. Our KPI is also how we are able to measure the achievement of our SDG goal. And this is the KPI of our people. You know, I wanted to close with the people because at the end of the day, you know, companies has different level of resources. You know, every company, you know, at the end of the goal, okay, they will produce a sustainability report.
Right.
But this is something that our people need to understand when they work on it. You know, how are they being part of that contribution on producing such a result? So the KPI of the people, I think, is important that that's also integrated into how they are measured in achieving that. And we have a whole lot of each of the project owners have the sustainability committee side that has really driving this through. But it's top to bottom. This is not just about founders committed on wanting to do it, but I think the people have to believe in it, that the company driving this way, this is the future, despite all the challenges that we're facing, climate change, financing, whatever. At the end of the day, this is the belief that we want, and this will make us successful.
And so, to Sunny's point, maybe this will also ensure that 10 years from now, we're not coming and circling back to the same bits of the conversations and the issues, moving the conversation forward. Sunny, Ibu Shinta, great to have you both. Thank you so much for your time today. And we've been talking so much about food and soft commodities. It's actually time for lunch. So I invite you to enjoy some of the refreshments outside. We'll be back at 3 p.m. Thanks again, everyone.